So just yesterday, I saw an article come across from Motley Fool about three explosive cryptocurrencies that could skyrocket in 2022. If that is not a YouTuber's dream video title, I don't know what it is. Well, my friends, not here, not today, not on this channel. We are not going to do anything like that, but I am going to cover one of those cryptos that has actually done really well through the news and hype cycles. We're going to uncover why it's doing so well, talk to you a little bit more about what's going on with it and what I think about it so you can make your own informed decisions. That crypto is Kadena, and I'm excited to talk about it and share with you what my thoughts are on this crypto and a whole bunch more coming right up. All right, friends, Wes Spencer here. Hope you guys are doing great. Thanks for joining me today. Before we get started, I want to say a quick shout out to my sponsor for today's video. I'm a big fan of this because I'm going to be there. This is the Bitcoin 2022 conference. I want to see you there, and I want to shout out and say thank you to them. This is going to be on April 6th to the 9th. This year in 2022 in, of all places, Miami Beach. Heck yeah, it's gonna be awesome. I can't wait to see you guys there. I am an affiliate with them and I am sharing out a registration code. It is WES10, WES10. Take a look at that. You're gonna get a discount if you register with my code. There's so much good stuff going on, and they have a new speaker. You see this? So this is Naib. I can't say his last name, not even try. The president of El Salvador. We all know what El Salvador has been doing, going full YOLO into Bitcoin as a whole. And why not? I love the adventure and I love what Naib is doing in his country. We're going to find out how this works for them, but it's so interesting. And by the way, I'm a huge Parks and Rec fan. And as soon as I saw him and I saw this image and I saw his, ribbon that's on there, I thought of this right here. So this is Sister City and Parks and Rec. I don't know if you saw the Venezuela article or the Venezuela show, the episode, but it was absolutely hilarious where Leslie Knope invites one of the delegates from their sister city in Venezuela. It is a hilarious show. So this should be awesome. Here is the code itself. I'm going to put a link to this right at the top on the video description if you want to see it. WES10 will get you into this. You're going to get a discount that comes with it. Here's the actual ticket code. But guys, this is going to be a phenomenal experience. There's going to be so many great things, wonderful people to meet, some amazing talks, amazing events. And honestly, I just can't wait to see you guys there. So check that out, WES10, as we get started. Okay, so let's jump into the content today. So I want to show you the article that I saw so we can kind of use that as a starting point. And then what I'm going to do is I'm going to kind of walk through how I think about these things. So one thing that people ask me a lot is, how do I approach and find cryptos that I'm interested in? How do I vet them? What do I think about them? And so sometimes I think videos like this are fun. This is just going to be like a constant stream of consciousness from Wes to you in the video, so you can kind of see what goes on in my brain. All right. Now, one thing you can do before we get too deep into this, hit like, hit subscribe, just take a quick pause and hit those buttons really quick, smash them. It does go a really long way for me, and share this with friends. Share it on Twitter, all that good stuff. I'd love for this channel to continue to grow in its content. Check out my membership stuff and also check out the donate link below. I'm supporting an awesome charity for the Mayfield tornadoes. I've been doing this for the better part of a month, and I want to see you get involved in that as well. Even if it's $5, it really does go a long way for our friends that have been disaffected in Mayfield, Kentucky, a place that I actually used to work in, which is why it's near and dear to my heart. Okay, so let's share this out. Here it is. So this is from Motley Fool, and overall, I like Motley Fool, right? Everything they have on the public side is a trigger to get you want to pay for their financial analysis on the stock side of the house. And just like Meet Kevin and all these other big YouTube stars that do tons of stuff around stocks and finance, everyone's kind of bled into crypto because they kind of cross together. And honestly, there's a ton of YouTube ad revenue in both, which is why they go into this as well. And same with Motley Fool, right? And so the three they cover is Avalanche and Ethereum is 2 and 3. And you're like, yeah, I mean, those make sense, especially Avalanche has really come onto the scene really strongly in 2021. But take a look at Kadena. I'd never seen them before. And I'm like, well, I don't know anything about these guys. I don't know anything. I don't know who they are. And it says that it ended up over 8,000%, which is good. There's several cryptos that did far better than that. But I thought it was pretty interesting, and it caught me, right? It talks about, it's hearkening from Bitcoin because it's proof of work based. And then this also caught me, 480,000 transactions. You see that? You know, one thing that we just can't say enough of, and I've said it on this channel all the time, Ethereum is super broken. And if there's been one area of innovation or even like purported innovation from crypto projects, it's this right here. Well, we're faster and cheaper than Ethereum, and that's our go-to-market. You know, like there's so many projects that are out there. Like take Cardano, for example. It's been, I don't know, building their technology for, it feels like the better part of a decade. Probably not quite that long, but it feels that way. And if you ask anyone in Cardano, like the big things are, you know, cheap transactions, great smart contracts, fast transactions. It's cheap. You know, you do anything in Ethereum and it's expensive, and it's left the world out because of its challenges as a layer 1 solution trying to go into layer 2 solutions as well. It just doesn't support it. And that gets frustrating to me that all these cryptos are that way. But anyway, Kadena is kind of sort of the same way, right? 480,000 purported transactions a second. Now that finally puts them on par and above like the major players that are out there, like with card networks like Visa and MasterCard and others, if it can actually do all of that. So I was like, well, that's really interesting. So the next thing I did was I thought, well, let's see what happens with the news. Like, why is this here? And like, what's happening in the news? And so I started looking at this with Google Trends. This is another thing I actually do, and you should get used to this as well, and just see, when did the worldwide trends happen for this? And wouldn't you know it? You see the spike that I see? Everything is fine and just kind of humming along, not much. And then wham, right here on November 7th to the 13th, it blew up in search traffic. I'm like, well, that's curious, right? Like internet trolls unite, and YouTube, you know, would be, moon pumpers unite and jump onto this, right? Like that's literally what happened. So I'm like, okay, let's do that. Let's go and pull up the news history from this period of time. See how I think about these things? And so now I'm just searching for Kadena, and I'm specifically putting in October 24th to November 30th, just to give me some really good coverage of this time period that really spiked in that second week of November. And so I took a look at this, and one of the things that comes right out is 3 reasons why Kadena KDA price went on a 500% parabolic, I'm guessing, skyrocket. This is from Cointelegraph. So I'm like, okay, that probably is the driver. In fact, look at this, November 8th, you go back to the trend searching, and this looks like November 7th to the 13th. So no doubt this was the news article that really triggered it. And you can go down and you can see some additional videos that have come out. And by the way, CTO Larson, this guy's awesome, by the way. Shout out to him. He's super sharp guy. Love his channel. I actually watched his video on this, and I really did enjoy it. So just shout out to another creator that I think is not a moon pumper, is doing a great job. I'm a big fan of CTO Larson. So a few videos that have come out. But then other than that, you know, you see a few follow-up articles that kind of followed the same thing, but the rest of them, not a lot of stuff. Most of it's how to buy it, all that kind of stuff. So I thought, okay, well, let's go check out the Cointelegraph article. And so here it is, and they're covering this 3 reasons why it went on a 500% parabolic frenzy. And we'll actually do some tokenomics here in a minute, and I'll show you the market so you can kind of see what actually happened. And so they kind of give a bunch of reasons for this. They show here's where it just blew up. So one of the things is obviously they're getting into the DeFi game. Who's not, right? Like you're not cool anymore if you're not doing DeFi. Like forget the use cases. Forget if there's any use for it. Forget whether it's a bubble or not. It's DeFi or bust these days, right? So here's Kadena in a tweet talking about how they're getting involved in it. NFTs as well, right? It's not just DeFi, but it's NFTs. You got to have both of them together to be in the Cool Kids Club. And so they've apparently entered into the Cool Kids Club with NFTs and some staking opportunities, which I thought was interesting because when you think proof of work, you think, oh, there's no staking at all. Especially when you think Gen 1 technologies like Bitcoin and then getting into Gen 2s that are proof of stake. You know, you think, well, the two don't go hand in hand. Well, why can't they go hand in hand? And I'll show you a little bit of some of that in just a minute. It doesn't have to be the classic staking that's like proof of stake, so to speak, right? So those are the reasons that purportedly it blew up. But this is probably a good segue chance for me to say this. That's just what Cointelegraph told you. That doesn't mean that's why it blew up. There could be all sorts of reasons, both outside of their scope of knowledge, way above their heads, or even insidious things that are happening for market dynamics and pushing things either illegally or just without much ethics behind it. We know that crypto projects do that. And so, probably a good chance for me to say this. Don't listen to Cointelegraph. Don't listen to people like me. I am not your financial advisor. I never have been. I never will be. Never listen to YouTubers. I need to get a t-shirt printed that says, don't listen to crypto YouTubers or you'll go broke like me, right? Because that's the truth. None of them know what they're talking about. Technical analysis is fun, but it is wrong far more often than it's right. So now that I've said that disclaimer, and I really do mean that, let's just jump back into this. So that's what they said about all of it. And I thought, well, let's go check out what YouTube has to say. So I checked out Kadena, and man, there's a whole bunch of stuff that's out here, right? There's CTO Larson's video right here, really, really solid. And, you know, here's BitBoy. How do you guys think I did? Right? Everything you need to know, why it's broken, massive crypto picks, top 3 articles to buy right now. Oh, that's interesting, right? So the top 3 are not articles, altcoins. Okay, and that's exactly what Motley Fool said. I wonder if they're the 3. I'm not going to go bother to check, but I wouldn't be surprised if they are. The bullish case for it, etc., etc. Now, I'm not making fun of all these crypto YouTubers. Some of them may be awesome, right? And I'm a crypto YouTuber myself, so I hope people make fun of me because, look, none of us know what we're talking about when it comes to all of this. So I thought that was a pretty interesting focus and perspective. So the next thing I thought I would do is, hey, let's take a look at CoinMarketCap. And let's see what we know about this. So it's currently trading at 11.24, which is interesting, but there's a couple things that are really going to stick out to you if you know what to look for that I want to cover. So first of all, it's now in the top 100, so it's really rocket shipped up. I wish that like CoinMarketCap would give you, like, you could click on this and show you where its ranking percentage has gone over time, because that would really let you know when it's hit hype cycles, and some go from complete obscurity into top 100 seemingly overnight. Wouldn't be surprised if Kadena was one. So it's at 11.24 right now, but here's what's kind of scary. The market cap is $1.8 billion, but look at this. The fully diluted market cap is it's almost 10 times that. What does that mean? So I talked about market caps in my live stream that I did earlier. I think it was this week or maybe late last week. I forget. And fully diluted market cap is what would the price be if we assumed all of the tokens on this project were in circulation? Because in this case, they haven't all been released. They're going to drip over time, kind of like Bitcoin. And so the entire solution, the circulating supply, is going to be 1 billion, right? So that's how many is going to come out is 100,000 millions, billions. Yeah, so it's going to be a billion that's going to be out there, right? And so we're nowhere close to this. The current circulating supply is 166 million is the current. So we have a long way to go is my point, which means there's going to be introduced a whole lot of inflation into this over time. So you have to keep that in mind. This is definitely a price that's not going to stick. Like, I know that they want the economics model to say as growth continues to happen, more users get in and more innovation happens, that will continue to introduce more to make room with supply, but it doesn't happen that way. So just know if you get into this, it's going to be volatile. It just is. It's going to be. A couple other things. Look at the markets. Especially here in the US, not a lot of market access, right? So KuCoin is probably the one that I would get started in. That's how you can do it off their USDT pair. So you're gonna have to trade off that pair to get in. Notice it's a little bit more expensive than some of the other markets because Gate.io and some of the others are just inaccessible for a lot of us. But let's check out the market really quick too before we jump into the crypto. And yeah, I mean, you see this, even the 1 day is pretty volatile, but let's jump back into like a 3-month view. So there's that big parabolic, blow up in price that we saw that really kind of culminated in mid-November, that trends with the article that we saw. So you can see the hype cycles for all of this, but you can see even before that, it was way lower, $1.80. And now it's hovering and seems to have solidified a little bit into the 11.12s. And I'm not doing technical analysis. I'm not that kind of guy. I would never do that to you, but you can see how it's had this meteoric growth. And so I just kind of have to pause and think, okay, this may be a great project. Is now a good time to enter? Well, I think it depends if you're long-term or short-term, right? If you're trying to play the market, I'm not going to say, you really need to go short-term to see. I'm not going to say when the good time to enter the market is, because I don't like doing technical analysis on the channel, as I've said 1,000 times over. But I will say, if you're a long-term holder and you believe this project is going to go somewhere and it's got a lot of traction and you like what I share with the rest of this video and the second half of the video, then any time is a good time to enter in the market if you're going to buy and hold for a significant amount of time. So what we're going to do now is we're going to cover some of the more mechanics of the project. I'm going to introduce it to you a little bit more. I'm not going to be an expert here, but I'm going to give you a little bit more information on what Kadena is, kind of how it works, how you can get involved in it, including how you can mine it, which I think is exciting because honestly, I'm always looking for fun technical projects that I can jump in and even do some mining or some way of getting involved in a more interesting way. I always think it's fun to dabble in crypto as well. So we're going to cover a lot of that. And should be a lot of fun. So let's go ahead and do that real quick. I'm going to share out. Here is their main site, kadena.io, if you want to see it. There's a whole bunch of, marketing blurbs you can see through all of this, smarter, safe contracts, whether it's true or not, I don't know. I'm going to cover Pact right here is the name of their language that they support. So I'm, this way beyond the scope of this video to say, is it actually safer? Who's to say, right? Lower cost transactions. I think we definitively do know that because of how the whole thing works with this braiding concept of multiple blockchains together. I'll cover that in a bit. Efficient energy at scale. Again, I'm not sure that I can really back that up. I don't know how much the proof of work is going to cost just in terms of like electricity throughput and the return on transactions per second. But I will say this, if they can support, hundreds of thousands of transactions per second, that does, even with proof of work and people spending a ton of electricity on mining, sure, that is efficiency at scale, no doubt. Proven security. Okay, look, just because someone comes from JP Morgan does not mean that this thing is better and more secure. There's no such thing as perfect security in blockchain or anything else. How do I know that? I'm a cybersecurity guy. Also, I come from banks. I know a lot of people from banks. In fact, my co-founder at Perch Security came from JP Morgan. So just because someone comes from some really well-known top shelf, top 5 bank in the world does not mean that they have any idea of what security is, or that the blockchain is secure, or that it is even, maybe it's secure today and it's great, but there's vulnerabilities laying around that we have no idea about, right? Like those things are the truth. And so I don't really, when I see proven security, sure, whatever, I'll just take your word for it. But trust but verify, right? Industrial scalability, again, going back to all of the capabilities of transaction per second. So I did see all of their partnerships, and I don't know the details of all these partnerships. I'd probably have to do a lot of research into the press releases to just say, is this a quick integration? What's the depth, right? But they've got some top shelf projects, CeeLo, Cosmos, Ledger, Polkadot is on here, Terra. You guys know I'm a huge fan of Terra. I did a video on Terra Luna a long time ago and it blew up. I've had a ton of people on my channel that are like, thank you so much for introducing that one to me. So I love this, but I don't know the details of what these mean. I need to do some more research. And then use cases below, news, all that kind of stuff. So that's some good information. And what I thought I would do is I jump into a bit more around the crypto project itself. So here's one of their docs. This is sort of their overview, and it's going to walk you through how everything works. And we're not going to spend a ton of time today jumping into every single piece of this, but I'm going to pull out a few things that I think are important in here for you to see. So, founded on the idea that blockchain could revolutionize how the world reacts. Yeah. Everyone says stuff like that. Good for you. Founders built a proprietary chain architecture, and that there's some truth to that actually. So you kind of look at how this works. I think I'm going to get into this a bit more in just a second. And then the other thing that's behind this, and I should talk more about the team. One thing I do like to see, and you guys know I say this a lot, is I like to see transparency with the teams. I like projects where the teams are shown. I like them where especially we know who the teams are and some amount of credibility in the past. Where did they come from? What are the things they've worked at before? And so we know Stuart Popejoy, who I mentioned before from JP Morgan, good for them. I mean, that's credibility for sure. It doesn't mean that this is going to be successful, but it's good credibility. Also, Will Martino coming from the SEC's Cryptocurrency Steering Committee. So probably this individual is not somebody involved in like writing blockchain code, but more the vision of how do we structure and build this and where are we going to go as a company and how do we do this the right way. And so these were the guys that reportedly built JPM coin. Now, this is a fun history lesson for you, and I don't have time to talk about a lot of this, but the CEO of JP Morgan, Jamie Dimon, has always been super anti-crypto because he saw it as a threat, as any bank naturally would. And he went from saying really, really awful things like, this is horrible, it's illegal, we should never get involved, it's going to fail, things can blow up, to finally him switching gears completely and being like, well, I hate Bitcoin, but we're going to get into crypto ourselves. And they funded a team and built it. And I guess that's what JPM coin is. I don't know anything about it. I don't know its usage. Nothing about it other than to say a whole bunch of politics wrapped up in that one. But I get it. JP Morgan and all the other big banks, they don't want to be the next Kodak. They don't want to be the next Radio Shack. I don't know if you guys know my sly shade I'm throwing at that one. But they don't want to be that. So moving on, a whole bunch of other stuff they talk about that you can just read up on this. If you're a developer, check out what Pact looks like. CTO Larson, I mentioned his video before. He actually dives in and does an intro into into Pact and kind of gets it going. You'll see it's got some bugs along the way, but definitely take a peek at his video if you're interested in writing on all of this. No cost transactions. So that's a big deal in today's market environment that we're seeing, tens of dollars, if not hundreds of dollars in Ethereum transaction fees. That's definitely something that needs to be fixed. Okay, so here's the video I wanted to show you. So let me turn down my audio because I don't want you guys to hear any of this while I'm sharing this. What I do want to do is just kind of talk about a little bit about how this works, right? So they kind of talk about how Bitcoin itself is a proof of work blockchain. The proof of work is the code that really builds it, that secures it, that incentivizes it, which is all true. And then their sort of go to market is this idea of they're not the first to come up with this idea, but they are one of the first to come up with, their implementation of this, which is it's a good way of thinking of it is braiding together multiple blockchains. So creating multiple blockchains all together that are then sharing code, that are sharing transmission data and consensus information between them, which lets the scale go much higher. So it's not that every blockchain is having to share copies of everything in the blockchain with other blockchains, just pieces of everything. And so the idea behind this is it lets it grow at scale much, much quicker, which is good. And they show how they have their own implementation of this, sort of their own science behind all of this. And they use like a graph scale, if you're familiar with like graph theory, that allows for all of this. So that's kind of where I have to pause on the video and pause and say to you guys, I'm not a mathematician, I'm not an algorithm expert, and certainly not somebody that knows a lot about graph theory or how this braiding mechanism works. So I'm gonna have to defer to others to see, does Kadena actually do what it says? Is it marketing blurb, or does it work? Or does it have scale and flaw issues? But here's the cool thing, it doesn't really matter. The reason it doesn't matter is this is a new innovative project. Let's see how it grows and flourishes. If you want to get involved in this, you're going to take some risk buying in or mining into it. That's just how the world goes. Maybe the whole thing will fail and fall apart. Maybe it's the best, most tested theory on earth as it'll turn out to be in the future, and everyone switches to it, including Bitcoin, or somewhere in the middle. I don't know. But the cool thing is, it doesn't matter at this point in time. We'll let experts do what experts do, and let's hopefully see Kadena and other projects flourish in what they're trying to innovate on, right? That's the way we need to think about it. Okay, so scrolling down, contract language information. It does have a layer 2 blockchain that I suppose lets it do the things that layer 2s should do, like smart contracts. That is called Kuro. So you can read more about that if you want to. And then the other thing I want to do is talk just briefly about the token economics. And then we're going to cover mining as well, so you can kind of get some information on that. So the economic model is, it's modern. It's like a lot of the new projects are doing. It's certainly not, they're trying hard for it not to be, a classic ICO. I'll share more about that in a minute. But here's the token allocations. So most of this is going to be dripped to miners, right? It's going to come from their mining mechanism, just like Bitcoin. So Bitcoin's the same way. There's unminted, unmined Bitcoin that the protocol produces over time that goes to the miners that have actually solved the blocks. And this is going to be the same way. So 70% of the entire allocation goes to them, 20% for the platform, 7% for investors, and 3% to contributors. So I'm not going to go into all the mechanics of this. I will say the white paper here is pretty well published on all of this, so you can get most of the information that you need on all of this. But a couple things I do want to say is because of that fixed quantity, this 70% that's going to be dripped out, just like Bitcoin, it's going to go for a really long time. You and I will not be alive unless some anti-aging drug comes out by the time that its mining supply is gone. So it's going to be fixed, and it's going to circulate and introduce inflation over a number of years. So it looks like by the year 2121, when I will no longer be around and hopefully will be remembered and enshrined forever in the YouTube Hall of Fame for not being a moon pumper, here is the circulation. So you can see the circulation slows down over time. But the fact is, we're introducing many millions of new Kadena every single year. So that equates to a whole bunch of money. We could find out what that is if I did some math and see how much is introduced each year and multiply it by the price, which today's price is $11.24. But I'm not going to do that. Just know that they're introducing a lot of supply consistently. And so that's going to affect the price a lot, right? I mean, it's just like any other project. But you just need to keep in mind, we're at the very beginnings of this. And so who knows what the price will do. It's gonna certainly go up and down. They give some use cases for all of it. I thought this was great. I got to zoom in this for you right here. So legal disclaimer right here, right? This one cracks me up. So our lawyers require us to tell you the following. And let me tell you why the lawyers are requiring you to say this is because the last thing you want to do as a crypto company is draw into the ire of the almighty SEC. the Security and Exchange Commission, right? They're the ones that govern what's a security. And they're the ones that have come under a lot of generation of a lot of heat for a lot of crypto projects. Especially Ripple is a good example of this for being a security. So here's what they're saying. Look at this. This is not intended to be an offer or sale of securities. If you're interested in participating, all the information is below. So they're basically saying, look, you're doing this on your own. This is not an offer of securities. Therefore, we're not a security. Therefore, this is not an ICO. Therefore, we're not going to get in trouble with the SEC. That's what the lawyers probably paid many thousands of dollars to copy and paste this statement. Thank you, lawyers. So you can see the liquidity models, how this happens, how everything's generated. You can also see that certain accredited investors were able to get in on this. The first non-US one happened early. This is because it's an easy way for them to raise funds to get started. And then secondly, if you were in the US, you did have the ability to get into this, but you had to be, I think, an accredited investor. Well, they say available to US and yeah. So you have to be an accredited investor. And at least in the US, there's a bunch of mechanics that go into that. Actually, in my last video yesterday that I did on Celsius, I covered what that looks like. The problem is it leaves a lot of people out that are not accredited investors. It's certainly an inside game, but there's reasons for that I'm not going to cover on today's channel. So there you have it. There's some information around all of this, not necessarily, terrible stuff by any means. And then there is an FAQ. I would encourage you to read the FAQ because it's going to give you some more information. One of the things I got kind of captured on is the Blake 2S hashing algorithm. So it's the first I've heard of it. I didn't know about it before. Target block time is 1.5 seconds. I think that's, again, really fast, given, Bitcoin being far slower. I think 15 minutes is roughly what Bitcoin is. If I remember correctly, I'm working off total memory. It is open source. There's certainly much more to read on if you want to see, right? So even braiding on the chains, all this kind of stuff, right? So what I thought I would do is well, let's take a peek at what the hashing looks like. Is it possible to do all of this? So here is F2Pool's website on how to mine Kadera. So you're going to need to use one of two things, just like the world of Bitcoin. You can mine with GPUs. You'll make a little bit of money on them, and I'll show you kind of some information on that. Or secondly, you can go with an ASIC, but that ASIC is going to have to support the algorithm, right? The algorithm that we just talked about, this right here, the Blake 2S algorithm. So we can see some more information around all of this. You'll obtain a wallet address. That's where it sends to. You're going to configure your mining. It's just like Bitcoin mining, right? It's pretty cool. Here's their miners page. So I clicked on this because I wanted to kind of see more information about this. So this goes to F2Pool's page specifically for like the different miners that are out there. So these are all the ASICs that are out there. And so you can see just average like revenue. Again, a whole bunch of like stuff I got to be careful on. This is an assumption of revenue, and this is at today's value. So if Kadena nosedives in price, well, you might be making $135 in today's value. Maybe it's a penny in future value. Or the flip side, people in the old days that were mining Bitcoin, like myself, were like, man, I'm not making much. I'm making $20 a day in Bitcoin mining, but that's back in 2012. You look at what that price is worth today, it's worth a lot more. So that's the thing about mining. You're inheriting a lot of risk on all this, and electricity costs and uptime and all this kind of stuff. So certainly don't take any of this. These are just ballparks, right? These are just rules of thumb. But what I did was like, okay, this is really interesting. So I picked one of them. Here's a popular miner. This is the IB-Link BMK1 Plus. So this one here purportedly will give you around $119 of revenue. Daily cost, if you're assuming 6 cents per kilowatt hour, just depends on where you live, on what your cost for electricity is, you might clear $115, just roughly speaking. So I was like, okay, well, let's Google this bad boy and let's see if we can find it. And see how much this thing would cost, right? So just clicking on one of these, I'd have to look around a little bit. It looks like the cost for this one, it's out of stock, shocker, right? So hard to get a hold of these things, is $3,000. So now you have some idea of what an ROI would look like with this. Am I recommending mining? By no means am I doing that, right? You can also look at like GPU only. So we'll just, here are some cards. Let's go GPU by card. And here we go. So you can take a look, even if you've got a GPU mining rig and you've done some mining. So you can take a peek at some of these. Like here's an RTX 3080, which is probably crazy expensive. But you're going to make, looks like about almost $40 a day off one of those cards. So they say, right? Your room's going to be running hot, all that kind of stuff. But I thought that was really interesting. I like proof of work because of the fun of mining. But I also know that it's very expensive to get into, and it's risky, and it's not always so easy to do. So there you have it. There is Kadena. What do I think about it? Here's my overall view. I think it's innovative. I like the founders and where they're coming from. I like its idea. I think the braiding mechanism, multiple blockchains, faster transactions per second are great. There's just a long time we're going to have to wait to see, do the smart contracts work? Do their partnerships with other innovative projects, is that going to turn out? Is the technology going to prove itself to be worthwhile or not? Those are all big things that I think are big unknowns. And so I would just say, if you're going to get involved in this, just know, just like all things, you're inheriting a whole lot of risk. And going back into the tokenomics just a bit, it's a current, sub $2 billion market cap. So it's got a really, if it succeeds, it could get much, much better in terms of price, in terms of your investment, all these things. But just know it's in that neighborhood of like a mid-market crypto cap that could fall apart, could do really well. But those are things to think about. Also, another thing to think about, I had mentioned this before, there's not a lot of market opportunity to get involved, which does tell us we're early on this, especially with the fact that most of the circulating supply is nowhere close. So I'm not telling you to buy it or not. I'm just saying it's an interesting project, and I can see why it hit the hype cycles in November and blew up. And I wouldn't be surprised to see that happen a few more times over time. Just know there's a significant amount of risk on this one if you're going to get involved. So I'd love to know what you think. Do you like Kadena? Is this a project for you? You hate it? And there's some big red flags you've got that keep you away from it? I'd love to know what you guys think. Give me some comments down below. Try to be pretty fairly neutral around the whole thing, just at a first glance, and kind of give you Wes's thought process on how I come about looking and vetting these cryptos. So let me know what you guys think. Leave a comment down below. Hit like, hit subscribe. I promise you, it means a lot to me, and it goes a really long way for this channel. Check out the donation link down below. Just $5. Hold off on a Starbucks coffee and consider donating instead, just once, right? That goes a long way for me and for the channel and for the folks in Mayfield, Kentucky. And until next time, my friends, I will see you later. Thanks.